Hey traders, in today's video, I'm going to be walking you through one of the trades that we took in this week's live trading room, as well as sharing with you one of my favorite candlestick formations to look at. Hey gang, my name is Akil Stokes. I am a professional trader and trading coach over at TradingPower.com, and welcome to my weekend review video. If you guys are brand new and this is your first time checking me out, this is a weekly video that I put out sharing with you guys what's going on in my trading life, as well as giving you some educational opportunities. Each and every week, my goal is to have you come away from this video a little more knowledgeable than you were coming in. And for you guys that have been subscribers for a while, as always, I appreciate the support. I appreciate the likes, the comments, the shares. And again, we're doing kind of a joint team effort here at Trading Power now. So everything is going to be under this YouTube page. However, I will still be putting out random videos under my own YouTube channel, such as the one I put out this Tuesday called 3 Things to Know Before Starting Your Business. So make sure you're subscribed to both. That way you don't miss out. As I mentioned earlier, in today's video, we're going to do 2 things. One, we're going to look at a trading opportunity that we took in the live room that demonstrates the importance of discipline and the importance of having patience in the market. And then at the end of our video, I'm going to walk you through or show you a recording of me walking through our live trading room members. I'm not sure if that sounds right, of me walking through with my live trading room members, one of my favorite candlestick formations to trade. So without further ado, let's head over to the charts and let's take a look at a trade we took on the pound yen this week in the live trading room. Now, it still means it's tradable. And here's how I like to do kind of my analysis on this. If we go back to the 60-minute chart, I said I was looking for a move to what level? Previous structure resistance up here, right? Structure leaves clues, structure acts like a magnet. There is a chance that price action could come to this 138.47 level. So what I'm going to be looking to do on the lower time frame is catch a trend continuation move, which is simply part of an outside return of the bigger picture trade. Is everyone with me? Or did I lose anybody? Cool. If I did lose you, don't be nervous. There's nothing wrong with that. All right, what I'm looking to do on the lower time frame is I'm looking to catch a trend continuation move, right? So I'm looking to get bullish here on a pullback, but understanding that my trend continuation move is still part of a bigger picture counter trend move. And this is actually not a bad opportunity right here. Look at these candles with the long shadows to the downside. Kind of short on the range bar chart, or kind of late on the range bar chart right here. I'm not sure if Kenny caught this or not, but I'll be looking for a pullback, looking for a trend continuation opportunity. The optimal area for me would be a pullback back down to our structure here, 136.54. But we're looking trend continuation to the bullish side here on pound yen. So we'll add that to our watch list along with pound dollar and euro yen. And we'll see if there's maybe there's a future trading opportunity with that today. And what we want to do with the pound yen is we don't want to give up on it. We want to reload. So you can see there's going to be a retracement here. Bring back my range bar chart. There's going to be a retracement. You know, if this thing's trending, there's going to be a retracement. So we wait for the next level. We wait for the next pullback. I mean, there's always a pullback. Look at this market. There's always a pullback. If we're in a heavy trend, there's always going to be a pullback. So instead of getting discouraged and crying and whining about it, you simply wait for the pullback, the next pullback. You wait for the next opportunity. For me, that's going to come between 37.24s and 37 flat. And you see if there's another opportunity to get involved. But like I think like Ryan said, the last thing you want to do is chase it. Because what happens when you chase the trade is you see it like this, right? You're supposed to get involved or You want to get involved down here. You're like, okay. We're going. Oh, the breakout. Here comes the breakout. Let me know if you guys have ever been here. Here comes the breakout. Buy. You ever do that? Knocks you out your OODA loop. You're not really sure what to do. You're like, just buy it. This is the breakout. I got to hop on. And what happens afterwards? What always happens, if you're on a demo account, it works perfectly for some reason. Live money, what always happens? You enter right there and then, right? Price action pulls back. Ryan says, not only been there, I used to live there. Yeah, I used to consistently be one step behind the market. One of the major flaws that I see with a lot of the traders I work with is really the lack of discipline and really not even the lack of discipline, but the lack of patience in the market. And I think it's kind of how our society has been molded in recent years. You know, everything is on demand. We're growing up where if we want something, it's instant gratification. If we want something, we want it right now. We don't have to wait for it. And we see a lot of that. I guess a lot of those tendencies carry over into the markets where a trader sees an opportunity, and if they don't have a chance to get into that opportunity right away, either A, they make a mistake and they try to chase it, and there's all types of dangers that can come with chasing trades, or B, they just throw it away and they forget about it. And if you're going to be a consistently profitable trader, you have to be willing to stick with the trade. The majority of the time that you do analysis, it's not going to pan out. I can't tell you guys how many times every day I make prediction after prediction after prediction, only to hit that right click button and delete all the drawings that I put on my chart because the market does something else. What's important is you want to make those predictions. You want to have an idea of how you want to attack the trade, and then you have to be patient. Just because you may not get the opportunity on the first try doesn't mean that you won't get a second try. And for you guys out there that are going to be trend continuation and trend following traders, well, just think about how a trend moves, right? Trends expand and then they give some relief. They expand and then they give some relief. Each time the market gives that relief, a pullback, a retracement, whatever terminology you want to use for it, that's going to be another opportunity for you to involve yourself in the trade. So one of the things that we did in this trade was, instead of pout and moan and say, oh, I missed it, it's the end of the world, and move on to something else, we stuck with it just in case the market provided us with another reason for entry. And it just so happened that it did, and we were able to take advantage of it. All right, sorry about that, guys. Yeah, so long at 137.46. Looking for targets. We only do one in, one out in the syndicate. So my syndicate targets are going to be, bring it over for you guys. Syndicate targets are going to be up at here at 137.74. That's a retest of structure highs on a higher time frame. With my other account, what I'm going to be doing is taking a half a position off right here at 130.74s and looking for the second half of the position to be up at 138.50s. So the real meat of this trade, as you can see, it's just a 1-to-1 to our first targets here, a little bit more than a 1-to-1. The meat of this trade is going to come on the second half of the position. But again, we can only take one position here in the syndicate. So we're taking everything out here, 37.74s for our syndicate program. But this is going to be a trend following trade, looking for that 138.50s for the second position target. And that's where I'm looking to get the meat of my target potential. So what I did was we waited for the price action to come down here. Right, we had our double bottom, we retested it. I have a pretty big spread on pound yen. I have about a 5-pip spread. So actually, they gave me 2 pips. After the close of this candle down here, I entered that market, got slipped a little bit, only about 2 pips, which is pretty good compared to what I usually have. And I got long. So we'll see what happens. Stops are 2 ATRs below our previous structure lows right here, 137.30, putting me down at 137. It should be about 20. It should be about 18. There we go. So we'll see how this goes. But we were eyeing that up for a while, and we got another pullback. So let's see if the market has some room to continue. Now, before I show you this next clip, I want to warn you that I'm going to do something different with it. Now, what we were doing in the live room is we were watching the trade unfold. So we were watching price action move after we were filled and working its way up towards our targets. At the same time, we were having a random conversation about position sizing and really compounding your money. But instead of taking you through that boring talk, I'm going to show you a pretty entertaining video while you're watching the price chart, which kind of go hand in hand. Now, the video is called the Angry Trader video. It's a video we released here at Trade Empowered, I think about 5 years ago, kind of giving you an example of the pain that comes with trading, the pain of sitting there and watching, price action move tick by tick while you're involved in a trade. So while you're watching price action from this pound yen trade move tick by tick and give us all of the pain in the world, you'll see what I'm talking about in a minute. Also keep an eye on this pretty entertaining video as again, it goes hand in hand.
Order filled.
Hey, Darren, do you got those numbers I asked you for earlier? What? Dude, oh, God! Oh! Oh!
Still watching pound yen. I just don't want to I don't like watching trades in progress. As many as the market will let me. Here's one thing that I used to do. Come on. There we go. Bang. Let's see if we can get some continuation going. Hold on. Let me make sure I do this on my other deal here. Let's ring the register while we're at it. Hopefully pound dollar is rising up too. All right, good. Now we trail. Now we trail to the bigger move. All right. Of course, stops are break even, stops are trailing. Stops are beyond break even now. All right, at the very end of this video, I'll give you guys a recap of what actually happened with pound yen after those first targets were hit. But I did mention that I would show you an example of a candlestick formation that I really enjoy seeing and kind of the psychological story behind it. Now, I mentioned this in the video, but I'm a little bit different when I look at charts, and it doesn't mean I'm right. It doesn't mean I'm wrong. It means it works for me. I like to create stories of what I see going on, and that just helps me identify what the market is doing. So in the following clip, I'm going to share with you the type of candlestick formation that I enjoy to trade and sort of the story that I put behind it, that allows me, I guess, to make sense of it in the way that works best for me. Here was the entry that I was looking for, and I love this combination. I'm sure it's got an awesome name to it that I don't know about, but this is the awesome combination right here. I'm going to take my black DSR off for a while just so you can see it. And it's the combination of this 3 candle combination. 1, 2, 3. And what do you guys notice there? If you've been with me for a while, you know I like to talk about the I'm the crazy trader, right? The psychology of the market, create a story. It's painting a picture for me, all the voodoo magic that everyone else thinks is crazy, but it really works for me. What do you see when you see this series of 3 bars? And keep in mind, again, where we're coming up to as far as previous structure. That structure is always key. That is the centerpiece of my trading philosophy. Remy says, nice rejection wicks. Yep. Here's the story I create, right? You have the initial candle. Obviously, we're in a bullish, we're moving bullishly, right? We come up. Big green candle, right? And we spike up to that level where we know previous structure resistance is at. And what happens on the first candle, guys? We get rejected. Second candle. What type of candle was this on the second candle? If you're new, I encourage interaction. If you're going to be wrong with confidence. Doji candle. What does a doji candle tell us? Indecision. So we've got rejection. We've got indecision. And then what's this third candle? What does this candle do? This third candle. I'll give you a clue. It's an entry technique. It could be an entry technique. Right? You get a lower low, lower close from the doji. So not the main candle, but a lower low, lower close from the doji. And it's always important when you see closes below candles. Right? I really like this as an entry technique. And I picture it like a boxer, right? I picture it like a boxer running up to its opponent, or you could do a UFC fighter. Sold it for what, $4 billion? A boxer running up to its opponent with all the momentum in the world, and then boom, punched in the face, right? That's the first candle, rejected, punched in the face. The doji candle is the indecision, when that boxer stumbles back and they're like, whoa, wait a minute. What happened? What happened here? Right? Knocked out of their OODA loop, I guess you can say. The third candle is when the other boxer takes the advantage. Now the momentum has shifted. Does that analogy make sense? Boxer A runs up, has the momentum, gets punched in the face, caught off guard, stumbles around, is kind of indecisive. What am I doing? Wait a minute, knocked out of his OODA loop. The other boxer takes momentum, and then the tide turns. You can, same thing, you can make a soccer analogy on a counter, or a football analogy with where the running back fumbles or gets hit and fumbles and the defense picks it up. You can make any of them in the world. I chose boxing today because I'm feeling feisty. But I like this combination. All right, guys. Now, before I show you the last clip of the pound yen trade and how it played out, I just want to thank you in advance for hitting that like button, hitting that share button, and if you're new, for subscribing. Not only when you do that does it make YouTube like my videos even more, which allows it to share it with more and more people and grow this community, but it gets me fired up. You guys know I do read each and every comment. I do check out how many likes I get, and the more I see, the more pumped I get. The more pumped I get, the more energy it gives me to come out each and every week to record these videos. So please do that. Leave me a comment as well. Tell me what you like. And if you don't like this video, leave me a comment, informative, right, of what you don't like, and I'll try my best to make it better. And for you guys that are interested in education, I get a lot of questions about it. There's 2 things you can do. The easy way is just go over to our website, tradeempower.com. Scroll through the homepage. We have a few free trainings on there. Click that Learn to Trade tab. There's even more free trainings on there. Take advantage of all the free trainings first. Then after you've done that, if you like what you see, if you like our style, hit the products and services tabs. That way you can get that's where you can gain access to programs like our live trading rooms, our syndicate program, or of course our full training courses. And then if you have questions about that, shoot me an email, akil@tradeempower.com. So again, I'll end things with the pound yen clip, kind of a follow-up of that, and I will see you guys next week. Until then, plan your trade, trade your plan. Thank you for joining me, and you guys have a great weekend. All right, guys, just came back to the office. We finished up our live room this morning, went for a little bit of a run, and want to give you guys a quick update. Hold on one second. Want to give you guys a quick update on a trade we looked at this morning in the live room. If you remember, I took a trend following trade on the pound yen, looking down at the range bar chart, and I was shooting for extended targets. So I was looking for our second targets up at, I think it was about 138.50s. Unfortunately, price action did come back on the range bar charts, stopped me out for break even on the second half of my position. And then eventually the market went on without me. And that's just a good example of the pros and cons of shooting for those extended targets. We talk about this a lot with our training course members that, it's good when it's good, it's bad when it's bad. And in some cases, it may be better to take a single target position. If you guys, I'm not sure if I put in the first half of this video or not, but I mentioned that in our syndicate program, Jason Stapleton and myself, we trade a 1 in, 1 out type of technique, meaning that we want to keep things as simple as possible for those syndicate members. So we only trade one stop, one target. And in the case of this pound yen trade, that would have been more profitable because instead of getting, I think it was 28 pips with the first half of your position and 0 pips with the second half of your position, someone trading a 1 in, 1 out type of deal would have gotten 28 pips with both halves of their position. However, the cons of that is when you do catch a big move, and here's an example of a pound dollar trade I took last week. When you do catch a big move and you're able to leave on partial position, you can make a massive amount of pips and just keep trailing that stop up and up and up and see where it goes. So there are pros and cons of both. And as I always say, it really depends on your trading philosophy, really depends on your trading personality. Are you going to go for the home run? If so, you need to take into account that there are going to be plenty of swings and misses involved in that. And if you're going to be conservative, you're going to get those smaller targets. You're probably going to hit them more frequently. However, when we do get moves like this that roll all the way up, you're not going to have a chance to take advantage of all of it, and you can't be upset. And, as you get more experience in the market, one thing that you'll discover is you'll kind of get a feel for when to shoot for the home run and when not to. I typically don't shoot for big trades like this, maybe only a handful of times a year, or handful of time a year. But I try to find the best situations to do it in. And in situations where it's not the best, I try not to leave any extra pippage on the table. So a good example of a trade today, plenty of lessons in it on, using a different type of chart, being the range bar chart, sticking with a trade if you're not able to get your initial entry. And then I just added this part on with kind of the difference between shooting for extended targets or shooting for conservative targets. So we'll see if I put this out to you guys, but hopefully you find some educational value from it. If you do, just leave me a comment below and say, hey, Akil, I like this stuff. Do more of it. All right. Take care, traders.